Taiwan and Korea leading the gains this morning with around 1% in terms of gains for both of these.
Inflation number at 5.72, far less than the CNBC TV18 poll.
Buy the dip today will be a better strategy rather than chasing that morning opening.
The good things that's happening for us right now is the aerospace industry, which is a large part of our business, is actually coming back quite strongly because of the various dynamics that are involved there, including air traffic on the civilian side.
The first tick on the index is absolutely flat, so Sensex and the Nifty very quiet.
We're seeing this incremental pressure on India. It is underperforming EM as China reopens.
Furloughs was a little higher in the last quarter. In spite of that, we delivered very good numbers.
We're still defending that 17,774 mark.
Immediate term, there could be a little bit of a dilution, but medium term, we are reaffirming our guidance of this being marginally accretive.
The vendors are not seeing a lot of confidence going ahead in terms of payment and therefore are likely to now ask Vodafone Idea to pay in advance its dues beginning the month January 2023.
The midcap index is now also turning into the green, but the front line, the indices have staged a massive recovery.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell, live from the CNBC TV18 Motilal Oswal studios. As you can see, I mean, it's three boys in the studio to take you through the last Closing Bell of this Friday. But it's a good day, right? And it was not a good day in the morning.
But earlier today, Prashant, we said 13th February, 13th of Friday.
It's going to be a...
I said it's a good day for the markets and it's a good evening. For the markets, it's been good. I just hope our evening is good as well.
I'm sure it will be nice.
all I'm happy about is the fact that earlier you all would call me if only the market was doing nothing to add the entertainment bit and all of that and stuff. But now markets are good, so I don't have to do any sort of entertainment.
No, that is you mistaken. All right, let's just quickly start telling you what's happened, right? I mean, the market did look quite shaky in the morning, like it has for the last many days. But then we've had this decent bounce, which is staying with us so far. It's not getting sold into. Fingers crossed. So the day's low was exactly 17,774. Which is the low from December. But I mean, yesterday, briefly, intraday, the market did make a new low, about 15 points under it. But in any case, the low from December, I think around that range, we got to it. And then there is a big bounce which has come through. Should we look at numbers on the upside, right? I mean, I think if the bounce stays, we will need to. And I think the first really big number is the 20-day moving average for the Nifty, which is at about 18,079. So that is on the Nifty. As I said, I think what we need, first of all, is a good, positive, strong close today. And then we will talk. But just in case, the 20-day is on your screen, 18,079. On the Bank Nifty as well, it's a very similar kind of a picture. On the Bank Nifty, the 20-day is 42,687. Banks, the Bank Nifty, yesterday did not break day before yesterday's low, and today is not broken yesterday's low. So let's see. But here we're about 300, 350 odd points away from the 20-day. We will watch if it gets taken out. All sectoral indices are in the green, and that is good news. So, broader markets are doing quite okay. It's sort of widespread, the participation. PSU banks, metals, and IT are the three indices which are doing the best. Midcap index, the last I checked, which was 10-15 minutes back, was absolutely flat. Small caps were doing a little better. Advanced decline is not wildly in the green in the positive, but it is doing just fine with more advances as compared to declines. Guys, hi.
Well, that move towards 18,000 now that quickly got rejected. In the last 10-15 minutes or so, we went to around 17,999. Yeah. And from there, we did see a bit of a downtick. So we pulled back closer around 50 points. On a closing basis, you'll want to close above that 17,906 odd. And I say this because 17,906 is the 100 DMA. Buying the dip around 17,750, that's worked perfectly. And that's played out yet again today. So that's clearly the zone where the bulls believe that that's in the slot and they want to whack it. And that's been successful so far. The Nifty Bank, we said it earlier today as well, it's been underperforming for the last few sessions. It could be the swing factor. It's a swing factor. It's outperforming today. Mildly so, though. It's come off the high point of the day, though it's still the outperformer in trade today. On the option side, the 17,800 put, the 17,900 put, well, between them, there's a good amount of open interest built up out there, more than 1.5 crore shares out there. So that's telling you that there is some bit of writing at lower levels. So the bulls are counting on that 17,750 level holding out. However, On the upside, the premium on the 18,000 call is around 113 rupees odd. So let's plug in the numbers then. For those that are writing that 18,000 call, well, the stop loss, for them, they're looking to defend that 20 DMA, which is closer to around 18,100 odd. And today's low becomes crucial as well, because that again is a bit of a support zone. Let's see where we go from here, Mangalam. But hopefully the last 55 minutes is good for the bulls, because otherwise it's been a pretty good trading session.
It's been a good trading session in the sense that we've recovered from the lows, but that's exactly been the template of the market, right? Every time it goes to around 17,770 thereabouts, we see a bit of a bounce, and levels closer to that 18,000 get sold into. For me, the biggest positive today was the way Infosys reacted to its numbers, because yesterday we saw the stock end at the high point of trade. We saw the same structure with TCS as well, ended higher ahead of numbers, post numbers, which saw a top line beat and margin miss. We saw TCS decline, but yes, same for Infosys. The fact that they went ahead and raised their guidance and deal wins were good as well, and the discount that it trades with as against TCS, Infosys recovery was extremely important because the Nifty Bank wasn't doing its job. So maybe, the IT pack coming in is a big positive. The Nifty Bank also then joined the party, and where we are at the Nifty Bank right now, 42,359, is where the 50-day exponential moving average of the Nifty Bank is as well. So important to see whether we see, we cross this hump or whether there is some resistance out here as well. Same for the Nifty, 17,967. The high day before yesterday on the Nifty was 17,976, and the high yesterday was close to 17,950. So we are right in the congestion zone. The broader markets, that's also another thing to watch out for. While the midcap index at an index level is mildly in the red right now, we're seeing more stocks advance than decline. In fact, for most part of the day, we had the red and the green line very close to each other, and now they are at the furthest point today, and we have 1,700 stocks on the NSE higher for just about 1,000 stocks which are declining. So broader markets looking better today. IT is recovering. That's a positive sign.
All right, let's see whether or not Mangalam, they were getting close to each other, getting into the weekend. Now they're moving apart. So let's see whether or not by the end of today, that those crisscross lines, they say, let's get closer by the end of today. That'll be an ideal scenario. Then you want the breadth of the market to stay in the positive terrain. First up, though, let's run you through what all we have lined up on the show for you, and then we'll go full tilt on the markets. Kolte Patil, that's passing on trade on the back of a strong Q3 update. We'll get the details in just a bit. Other stocks that are gaining in trade include MCX of hopes of a volume boost from the new contracts after market regulator SEBI allows multiple base metal contracts. Details lined up on the show. And Morgan Stanley in its latest report says that they see potential for strong catch-up rally in NBFCs. Key highlights from that report lined up on the show. And key earnings to track tomorrow. We'll get you expectations from HDFC Bank as well as Avenue Supermarts. And finally, we'll discuss the way forward for the markets. Pashupati Advani of Global Foray will be joining in.
Okay, well, will the gains last? What should you do? What trades to take? That's the question, isn't it? Let's bring in Mitesh Thakkar to help us with those questions. Mitesh, thanks very much. Good afternoon. You've been kind of skeptical that eventually this gets broken and there are lower levels coming. But so far, a comment on the price action today and your trades.
Prashant, we've got a bounce back, and while I have my medium-term view and the longer-term view slightly on the negative side, we've suggested shorting only once you break 17,800, and that's not happened. So on 4 weekly candles, starting from the candle of 23rd of February, we've had weekly lows in the range of about 17,760 to about 17,790. So very clearly, I think you will want this level to be taken out before you want to go short. And on the upside, any reversal will happen once we start getting past 18,000, what I said. And today, I think the high we got is around 17,999. Beyond that, 18,150 and then 18,250 are two levels. So it is a market which is not very strongly directionally biased, but has declined, has done some mild weakish kind of a base building around 17,800 and is trying to bounce back. Beyond 18,000, I think a pullback rally could extend by about, as I said, I think, to about 18,150, 18,250. So that's the view. But I think overall belief still remains that eventually I think there's a stronger chance of us going down and breaking below 17,800. For the time being, the stocks which I have, rain industry or rain commodities, I think that's a stock which is broken out very nicely on the short-term charts. Recommending a buy here with the stop at 179 for targets of 195. And Syngene is something which I think can retest the earlier highs of 640. So that's a buy with a stop at 609.
All right, Mitesh, thanks a lot for that. So that's about Rain Industries up around 4%. Mitesh likes that. But one stock which has been surging and how, ever since it reported its third quarter business update, and the traction only accelerated towards the last half an hour or so in trade. The stock is up about 15%. That's Kolte Patil on the back of their third quarter business update. Sonia joins in with more. Sonia, what is it that the street likes most?
So, Kolte Patil is up 15%, as you rightly pointed out, and the reason is because of record quarterly sales that the company posted in Q3. So, the Q3 numbers, they've posted quarterly volumes of 1.13 million square feet, which is the highest ever that they've done in a single quarter. That's a growth of 31% compared to same time last year. In terms of quarterly sales as well, 716 crores is a record high for Kolte Patil. It's a growth of 28% year on year. Now, the company has launched 2 million square feet across 6 projects in Pune and Mumbai in a single quarter, and that's important because they did guide for delivering more than 3 million square feet in FY23. So a large chunk of that has already been launched in this quarter itself. Their flagship project, Life Republic, crossed the 500,000 mark and recorded volumes of 6.6 lakh square feet, which is the highest ever that they've done in a single quarter at their project Life Republic. Now, the company said that they're on track, well on track to deliver 30% growth in pre-sales for FY23. If you look at the stock, there's perhaps still more headroom because the stock is down 40% from its 52-week high. And Kolte Patil has also successfully done a lot of funding in the recent past. So recently, they raised about 200 crores from Japan's Marubeni Corporation for their residential project in Pune. So lots of positives coming in for Kolte Patil this afternoon. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, Prakash Devan joins us on the show. Prakash, what are you making of these numbers? From the real estate pack, this one's clearly run away. We have been, hearing about sales picking up, smaller ticket moving. But where does Kolte Patil feature in your list?
Good afternoon, Nigel. So, I think it's interesting that Kolte Patil has all the time, if you see the last couple of years, in building its capabilities in terms of new launches, the kind of inventory buildup that was converged in this particular quarter, and that's kind of translated into a lot of the pre-sales or the bookings, is a very clear indication of how the entire sector is going to behave. Anybody who has spent enough effort at strengthening a balance sheet, and they've done this with Marubeni, I mean, they've raised money at a very decent terms, is the one who's going to actually go to the bank smiling. It's as simple as that. Balance sheet expansion, deleveraging, and quality, timely deliveries is what's helping everybody, whether it was Godrej Properties of, let's say, 3 years back or a DLF earlier than that. It's all going to be about that. So this is a great space where you will probably see these kind of updates coming from a lot of the players who managed to get things right, because we were worried when they expanded their balance sheet, but now the results are showing. So that's where the market tends to be much more gracious and amply reward the stocks. If you look at the real estate space, the corollary is that construction material, home improvement is definitely going to grow with a lag, and so is housing finance. These bookings can't be sustained without growth in housing finance. And I keep on saying, if NBFCs is the place to be, there is credit expansion happening there. There is quality books which are being built up. You don't miss out on that particular thing. We've seen how Canfin Homes has recovered from its lows, given all the restructuring that's undergone. You look at how PNB Housing Finance has been, and that's been one of my top picks. We've been talking about it since almost pre-Diwali, if I remember correctly. It's got all the ingredients in terms of being able to build a very significant franchise, and it's already showing. I mean, from that 430 zones, you've seen closer to 560, 570. So, these are plays that you will probably be more rewarded, Nigel, from a medium to longer term perspective, rather than just the real estate plays. Real estate plays will keep on having a rotational kind of a thing. You'll have some of the other player doing well in a particular quarter, so you can't keep on chasing that. But from a more secular, broader perspective, I think the housing finance companies will be a very good bet.
Right, Prakash, good afternoon. Just wanted your thoughts on two names. One is the top F&O gainer today, which is MCX. As SEBI has allowed reintroduction of mini contracts in non-precious metals, this is likely to increase their volumes. But the worry for MCX remains with regards to, the software transition that they were going to do away from 63 moons and improve their margins. That's one. And the second one is L&T Tech Services, the 800 crore acquisition. That's the top F&O loser. They've acquired a business from L&T at 800 crore rupees, which is significant amount of cash off their books going off. And the street is worried about the margin profile of the company that they've acquired as well.
Yeah.
So a comment on both the top F&O loser and the top F&O gainer today.
No, absolutely, Mangalam. I'll take the latter question first on the L&T twins. The L&T transaction is something which is a very meaningful, significant related party transaction. And it needs much more explanation, right? Because both of these are well-governed listed entities. You can't kind of just gloss over it by saying, okay, L&T sold out this business and the tech arm is buying it. I mean, they're separate businesses, separate companies, right? So you could be a shareholder in L&T Technology Services and not necessarily have the same kind of empathy for the L&T shareholders, right? And why is L&T wanting to sell a business if it was profitable in the first place? And why has it taken so long? I mean, they've been harboring it for quite some time in terms of this thing. And the profile is not something which is very accretive in that sense, in that congruent alignment with the current business that LTTS has. So there are questions that need to be answered. I'm not saying there's anything amiss, but it needs much more transparency and explanation is what the market would like. And both of them have a fair smattering of institutional ownership, which would definitely be very keen on that. So that's my call on this thing.
Okay, all right.
Sorry,
yeah.
I missed out on the earlier question, Mangalam.
Actually, Prakash, it was MCX, but hold on.
Yeah.
What we'll do is just come to you, but Surabhi is, our colleague Surabhi is standing by on exactly just explaining the news flow, right? I mean, because SEBI has allowed certain changes which the market deems to be beneficial for the company. Surabhi, over to you.
Hi, thanks for that. So MCX will be in focus today, and that is because SEBI has allowed multiple contracts in commodity segment besides non-precious metals. They have allowed exchanges like MCX to reintroduce multiple contracts in base metals like aluminium, copper, lead, and also in crude. These contracts were earlier discontinued in Jan of 2020. Now the change in the stance of SEBI is to increase investor participation and also to cater to all value chain participants. Analysts believe that this is positive for MCX and it could lead to a 7 to 8% increase in their futures average daily turnover. Before it got discontinued in Jan of 2020, the base metal futures contributed 25% to their average daily turnover, and crude futures contributed in the range of 15 to 20% in their average daily turnover. MCX can also introduce mini contracts and options, which will further add to their overall average daily turnover. The only overhang for the stock is the technology transition from 63 Moon Technologies to TCS.
Okay, all right, Surabhi, thank you very much for that. As Mangalam also pointed out, that's a risk which remains, but it's up 6% today. Prakash, any thoughts on MCX? And then, I mean, just a quick word on the market as well. You think these gains, one can take sort of tactical kind of trading positions here, or you think it's still a little shaky? Go on.
So, good afternoon, Prashant. So, on the MCX announcement, I think it's a representation that has been made by the company for quite some time, and I'm sure there has been a tacit assurance that the technology transfer will not be any sort of a inhibiting factor for the company to be able to do this. What they're going ahead and doing is creating so much of depth in their contracts, which in pockets which are very promising for most traders. And as an exchange, I think you would only create a bigger market and a wider participation, and hence this positivity in the stock today. I wouldn't be surprised if it actually leads to much more than that 6, 7, 8% which you're talking about, because it brings back a lot of people. There's more capital that gets allocated to do the turnovers, and an exchange like this only thrives on higher volumes and turnovers. So it's definitely going to be that. The 63 Moons issue is still going to be an overhang. If it comes up and becomes a deterrent, then anyways the exchange has much more to pay as damages. So that's going to be a different thing. But this news flow is definitely going to be rewarded positively by the market, and it is being done. So on the market, I think, Prashant, we've seen a little bit of a relief from the first slew of tech earnings, where there was a lot of anticipation for negative news flow to come through, or some sort of a stringent commentary, which made things difficult going ahead. But the commentary is not also talking about any assurance which is beyond, let's say, March. I mean, everybody is talking about whether there's a guidance revision by Infosys or some sort of upgrades in, a relook by TCS. It's all up to FY23 end, which is March. The key is how long can this sustain? I mean, is there any renewal of contracts that's happening? So the TCV will have to start capturing qualitatively much more than just growth quantitatively. And that can probably be visible sometime around Jan, Feb, when some of these contracts get announced from the larger players or the US companies. So I think all of them have their own share of wins and problems. Somebody is struggling in Europe, somebody's done well in the US, somebody's recovering some of the verticals which others are struggling. So it's going to be a mixed bag, and I'm sure Wipro will add to that confusion. All I can say is that the market is waiting for some positive triggers to take it forward, and for some reason it's not finding that in the earnings yet. So hopefully some of the banks will probably give you that, because that's one pocket which I expect Q3 to be very promising. The larger banks particularly, which come earlier than the others. And then, of course, there are some catch-up plays like Reliance and all, which are very clearly dragging the market right now. So if Reliance starts participating, don't see any reason why the Nifty will not resume its march to the 18,000 plus neighborhood. But for investors, it's a great time to let the market settle, consolidate, be sideways, pick your stocks well. And there's great news flow around some of the big stocks which we've been waiting for, like Maruti. The Jimny launch has actually gone a bit, it's been more sensational from a car perspective, but from a company and a stock perspective, I think it is far more promising than what the market is factored in. And so soon you will start seeing that come about in commentary and notes and all. So there's lots to choose from. But yeah, I mean, as a trader, it's difficult to be able to do this on a daily basis. And I have all my sympathies with the traders. As an investor, it's great timings to look at stocks which have corrected or which are in the soft zone and where valuations start getting attractive once earnings come.
Okay, all right. Prakash, request you to hang on. We'll slip into a short break. As we do that, here's something that you, our viewers, must take note of. CNBC TV 18 and the National Stock Exchange, we have come together to promote investor awareness through a very special campaign, Informed Investor, and that empowers you to make the right decisions with your money. Nothing in life is guaranteed, right? But many investors fall for the guaranteed returns gimmick. A smart investor always avoids investing in such schemes and is aware that they are illegal, and also they must be reported to the exchange. Any investment in such schemes is not eligible for any kind of compensation from the exchange. Hence, it is wise to avoid investing with anyone promising guaranteed returns in the securities market. Welcome back. A couple of stocks are coming off their 52-week low. Case in point being a Biocon. Suddenly that stock has spiked. I remember it's been an underperformer, but that's suddenly seeing some bit of an up move in the last few moves. So keep an eye on that one. Dabur is cutting its losses as well. It's moved to the high point of the day. And I believe our sister channel CNBC Awaaz, well, they were giving out pizzas today. And Jubilant Foodworks, as we speak, has moved to the high point of the day. Did you guys grab a bite?
I did grab a bite, Nigel. I wouldn't lie.
Prashant, you?
I did.
You're the only one who hasn't grabbed a bite. So maybe they'll order more, and which will further increase their SSSG.
It's a Friday, guys. It's only about liquid.
I live on a liquid diet.
It doesn't look like you've planned to consume a lot of liquid this time around, because I'm just looking at United Spirits, United Breweries, both of them at the low point of trade. Nigel, what's happening here?
That's a teetotaler talking. Let's get back to the markets. All right. Well, Morgan Stanley, they've come out with their latest report and they see potential for a strong catch-up rally in NBFCs. So we're going to come out of weekend mood, get back into the markets, and Abhishek joins us to help us out with that piece. Abhishek?
Well, it's one of the rare reports that you are seeing about a brokerage being bullish on NBFC. So Morgan Stanley has written on NBFC with a 2023 outlook. They see potential for a strong catch-up rally. The key themes that they are mentioning is that return ratios will improve for most of the companies under coverage in FY24, amidst given the fact that there are strong underlying fundamentals that the companies are at. Relatively, valuations are attractive. There is shift in narrative negative, they should prepare for a catch-up in next 3 to 6 months. Low headline valuation is also making it attractive for investors to invest in NBFCs, and 2023 could see milestone resolution of debates as well as overhangs on many stocks that they have under coverage. So order of preference they have mentioned is that they have a tier 1 list wherein they have all overweights rating, and they say that stocks with strong earnings, catalyst and low risk of disappointment, these are the preferred picks. SBI Life, Bajaj Finance, Manappuram Finance, Mahindra Finance and PNB Housing. In tier 2 list, all they have overweight or a buy rating as we call in general language. They say that over here, attractive valuation but lack of near-term catalyst or presence of overhangs which could lead to some disappointments. So SBI Card, ICICI Pru, HDFC Life, ICICI Lombard, PB Fintech and Shriram Finance is in that list. And equal weight rating that they have are on stocks like Aditya Birla Capital, Chola Mandalam Finance, Muthoot, L&T Finance and HDFC AMC, while they remain underweight or a sell or negative rating as you may call on Indiabulls Housing Finance, LIC, HF, MCX and Indostar Capital. Back to you.
Okay, all right, Abhishek, thanks a lot for joining and giving us a detailed report. Prakash, you heard what Morgan Stanley had to say in their pecking order. What do you like from this space, NBFC space?
So, to be honest, I don't have such a deep insight into the entire sector the way Morgan Stanley probably has. But what I can tell you is that the pockets that very clearly seem to be coming of age in terms of visibility for the next 2-3 years in a rising interest rate scenario. The first is the HFCs. All of them seem to be getting their act together, including smaller ones like ours, which have been spending a lot in terms of capability build-up and technology strength and all. But the star one is, of course, PNB Housing Finance from a restructuring opportunity perspective, and Canfin Homes in the second slot. And on a slightly more risk-free or low risk kind of a risk-reward favorable situation is in Chola. I think they definitely are sitting at a very strong position of strength from an expansion perspective and a margin improvement perspective. So I would put my money, in these two pockets. Stay away from the gold financials. Gold has seen a little bit of a smartening up, but that doesn't really mean that you could see it translate into great gains for the medium term. And of course, we've seen the rest of the NBFCs on personal loans battle it out with growing competitive intensity. So, the likes of Bajaj Finance and Poonawalla and all of them. They're great businesses, but are they great stocks is a question at this point in time. So, housing finance companies and Chola on the other side, I think is a good balance.
All right, Prakash, thank you so much for joining in. Actually, just before we let you go, there are a couple of stocks which are doing well. Nitin Spinners is one of them. It's up 10% this week. It's moved to the high point. Data Patterns is the other one, which also has been doing well. So, that one comes up for you on the screen. And Green Panel Industries, that's the other one, which is also higher. Green Panel, everyone's talking about, oversupply in the MDF market, etc. Do you have any thoughts on these counters? Nitin Spinners, Green Panels and, Data Patterns?
So, Mangalam, the only one that I've covered in the past has been Nitin Spinners, and that too was when it was at a stage of inflection, market price levels of about 60, and then we've seen the journey from there, 5x kind of a move. Primarily because the leverage that they had is translated into a very, very efficient asset buildup that's been throwing up and improving their ROEs significantly quarter on quarter. So I think they continue to do that. They modernize themselves to at least sustain this kind of a trajectory for the next 2-3 years. And given the global setup on textiles and all those excuses that we keep on making to explain why we are good, whether it's China +1 or Europe -1 or whatever. I think it's the strength of the fundamental textile industry improvement in India that's showing results, and Nitin Spinner will ride that wave. So we'll continue to have a positive view on that, not so much on the other two names, which I honestly don't cover at this point in time.
All right. Thanks very much, Prakash. Appreciate you joining in and good speaking with you. As always, have a good weekend. See you next week.
You too.
Pashupati Advani of Global Foray is now joining us to take some questions. Pashupati, good to have you with us here. Welcome back.
Thanks, Prashant.
Just a quick word, if you will, on the market itself. Are you, some that we spoke with, actually very few, are talking about what I think is presumably the oldest rumor in town before the budget, changes to capital gains taxation. Like clockwork, it makes an appearance and then we forget about it after the budget. Not that it can't happen, but I don't know if there is any use speculating about it or fearing changes on the negative side. Any thoughts at all, Pashupati?
Well, there are two things. One is that we have this, what I call the 31st January 2018 tax. So any gain above that level, and I think the Nifty is up about almost 25-30% from those days, 10% of that gain goes to the government. So it is, and that is not adjustable against anything. So in any case, the government is participating on the upside of the stock market. The second thing is with the calendar of 23 and 24 and political elections, I actually think this budget is going to be kind of soft. And it's not going to be, like something that's going to be hurtful, because I think all parties have realized that the market is not to be cut. So, I'm more on the line that, the capital gains is probably not going to happen. As I said, we already have a tax, and then you'll have people suing, saying you've got double taxation on the same transaction and things like that. So, that's the other challenge. If they take that away and put capital gains, that might be interesting. But I think that would be also making it more complicated for the small investor, which is not what I think the desired outcome for the government is. Prashant?
All right. Hi, Mr. Adani. Nigel on this side. It's the first time we're speaking in 2023, so we're wishing you a good one ahead, and we look forward to your views all through the year. Mr. Adani, I was looking at ICICI Bank. From the highs that it hit on November 30th, well, the stock is down close to around 10%, and it's underperformed HDFC Bank. Now, valuation-wise, I recall when ICICI was at around 2 times and HDFC was more than 3 times. Now, they're probably trading at a similar valuation. Well, you have not been very positive on the banking names. At what level do you think that you look at these banking names as well? They've clearly been the consensus buy, but how would you view them?
They are a large part of the index, and therefore, if you want the index to go up, you have to be in this sector. I'm an investor, so I don't have to be in it. So, I'm kind of watching it, and I've kind of missed it. But I actually feel that there are some undercurrents. There are some NPAs that are coming up. For example, there's some negotiation going on about RCOM. There's 28,000 crores to be written off. I don't know how it's going to be written off. It may be already written off, in which case it's better for the banks. But I think that, overall that money has to be paid from somewhere. And, it is that's kind of making me a little bit fearful. The second is that, you've got a lot of NBFCs that have lent money to individuals via, Amazon or via, FMCGs and things like, consumer goods and things like that. So, those may or may not continue because, people are losing jobs. I mean, you're seeing people in the IT sector, for example, losing jobs. And then you've got this new phenomenon, this chat GPT, that's going to actually probably replace some call centers. So, these things are sort of very disruptive. And I think that that's what we need to be a little bit wary of. Nigel?
Right. He spoke about the chat GPT bit. I was speaking to some people, and they said a lot of brokerage guys have said that a lot of the reports that they've written already have been through chat GPT just for them to test it out. Obviously, they haven't published it, but they're eerily similar to what they would have written otherwise as well. So it's an interesting trend we have to watch out for, because if a lot of analyst reports are written by chat GPT, then maybe analysts out here, people like us, are totally replaceable. I hope so long as there is no chat GPT anchor out here, I guess.
That's not going to happen, Mangla.
I hope that doesn't happen. Let's pray.
Let's get our question to Mr. Advani.
Yes, let's go to Mr. Advani.
I have news for you. I've seen actually on WhatsApp, one of the newspapers has put out an anchor speaking about things to be, which is done by AI. I guess it's been done by ChatGPT. So I guess
I thought you'd bring us good news. I thought you'd bring us good news, but no, you're scaring us. I thought you'd bring us good news, but you're scaring us further with artificial intelligence and all of that and stuff. But my question to you is with regards to flows. Now, the first few days of a few sessions of January, we've seen an outflow of almost $2 billion from the FIIs. China has been outperforming. What do you think is happening out here? I mean, on the way up, we were outperforming. Do you think we'll decouple on the way down as well, where the world moves higher and we go lower?
See, people had run away from China because of what was going on and the fact that China had sealed their borders. Now they've suddenly opened up. And, somebody who wants to come into China, the waiting is much higher than ours. So you're seeing, even sages of the market like Chris Wood saying that I put money into China and I'm cutting 0.5% in India and Korea. Now, that 0.5% cut in India and Korea is a lot of money for us. And the incremental into China is still a sort of a blip. But I think that a lot of fund managers, a lot of EM fund managers are seeing movement towards China because they think that now, certainly the Chinese fund managers of Chinese origin are actually shouting from the rooftop saying, buy China, buy China, buy China. So that's also taking some money away. And we're seeing the outflows. And our market has been at the top, it's been overvalued, but we have seen money going out because it's been such a good performer. Nigel?
Pashupati, what are you doing with your money? What have you been doing with your money lately?
See, again, I have been extremely conservative. And what I'm actually seeing is that it's probably best to look at debt and to look at, I've been a gold bug, so I'm happy that gold is moving in the right direction. I've also been in debt, but I bought things like the REITs and things which are beginning to get affected because generally rates are going up. So REITs will come down and I'm seeing a little bit of that. But taxation issues kind of leave me stuck in those. So I think that, there is some movement towards more fixed income, more higher dividend type of investment. And I think that's where we're going to be. And that's, and again, I'm not so bullish on real estate as other people are, but I think that real estate also people are looking at it as a yield investment as well, that the yields on real estate should go up.
No, got that. Pashupati, in terms of the equity portion, right? Have you made any changes? Have you are you taking profits already? Have you already done that? I mean, how are you funding some of these?
I've got a portfolio.
Yeah, sorry.
No. I've got a portfolio that I'm actually comfortable with a few sectors. I was quite happy with specialty chemicals. I have lightened up, but they are also going down a lot faster than I thought, simply because they were all at 40x. Some of them are still holding some value, but I think that that's a sector to lighten up on. I'm very comfortable in mid-cap cement because I think that the government is doing a lot of infrastructure spending, and we're seeing cement demand going up. Of course, a lot of it is going from Adani to Adani, but besides that, there is some movement in the cement sector because of roads and because of buildings to be completed. So I mean, those are sectors I'm still, the hardcore basic sectors I'm still comfortable with. And I actually think that, in the GDP, the basic commodity sectors will probably do better this year than the services sectors. And I think that's what's going to make the difference in the market.
All right, Mr. Advani, final question before we let you go. I recall when we started a couple of months ago, you said that maybe the big four from the new age themes, they could be a counter call. It seemed like you were giving them a second look. Now, in some of those counters, there will be quite a lot of supply. Maybe a Paytm. Have you invested in any of them? Are you giving it a look, or are you happy being a gold bug? And go ahead.
I had put Paytm at the front of the list, and I did nibble into it at these kind of levels. I think I'm at break even, maybe slightly down. Again, that shot of 3% of the company that suddenly came in the market surprised me because there was. I'm waiting to find out who that was. But as I said, out of the four, Nykaa has been quite badly hit, and Zomato's kind of floating in there. And I think Zomato's okay. Paytm, I think, is the winner out of the four. So, it is definitely worth nibbling at these levels.
Look at delivery, right? Delivery is at a new low today.
Delivery is at a new low as well.
2%, 309, all these names. Paytm, of course, has come up a little bit from the recent lows, but not by much, though. Pashupati, thank you very much. Although I thought to Nigel's question about new age, Pashupati is an avid private market investor as well. At least he used to be. I don't know if he does much of that now. But
a lot of liquidity has dried up in the private market as well, right?
I think that peak craze has kind of gone now. So that is 100%. Pashupati, thank you very much for joining us. Good speaking with you as always here. Have a good weekend. We'll see you back again. Right, time for a very quick break here. And we come back with a segment.
No, let's not go into a break. Nimesh is here. Let's go straight to Nimesh.
Let's take a commercial break because that gets us salary, right? So I'm okay to skip my link as well today.
No, I thought you were after the break, but go on, Nimesh.
So again, a good recovery from intraday lows, largely led by financials and technology. I think again, 17,800 is what the bulls are trying to defend very hard for this week. Every day, that's been the trend that they've tried to defend that level. And so far they've been successful, right? So let's see how it pans out next week. In terms of flows, again, a mixed day. There is a bit of selling in the FMCG names, the consumer discretionary names. And on the other side, there is some bit of buying in the metal names. And I guess metal largely because of dollar index cooling off. There is some bit of surge in the prices as well. So that's helping the metal stocks. In terms of trends to watch, I guess earnings is going to dominate the trend, at least in the near term. We'll have two large earnings coming up over the weekend as well. So that will set the tone for the banking Nifty through HDFC Bank. So that's something to track. But I guess, again, really a day of, week of consolidation, so to speak. We are not breaking 17,800 on the downside, but we are not even crossing 18,200, 18,300 in the upside. So that seems to be the range for the time being.
All right, Nimesh, take that point. All those who were wondering, there are 3 boys in the studio.
Now there are 4.
Nimesh, individual stocks, what do you have for us?
So in terms of individual names, the first stock on my list is DLF. After a few weeks of consolidation, some signs of buying back in that particular name. So there are some buy flows at NFI desk today. So the delivery volumes are expected to be quite high in DLF. So that's the first one. The second stock is M&M Financial. That stock is slightly under pressure today on largely selling pressure from the leading FIs. So looks like some bit of profit booking in that name in today's trade. And the last stock is Dabur. I spoke about, overall there is selling pressure in the consumer and FMCG names, and Dabur stands out today in terms of purely selling pressure. So that stock is marginally under red, but there is selling pressure from leading FIs in Dabur as well in today's trade.
Okay, all right. Nimesh, thanks a lot for joining and giving us that quick update. For the time being, though, we'll slip into a quick break. But here's a quick programming note then. Our weekend special Editors Roundtable is coming up at 4:30 p.m. today. You don't want to miss this. Let's get you a sneak preview into what are the themes we're going to be discussing on the show. The spotlight this week was on gold, as Indian gold prices hit record highs of around 56,000 this week, with expectations of single-digit returns in equities this year. Should investors continue to focus on alternative asset classes like gold? Does data suggest that gold outperforms in recessions? Well, we'll find out what to expect from earnings in Q3. And will there be more EPS downgrades? That's the big question. And which sectors as well as stocks are expected to surprise? We'll get you a quick analysis.
We'll also talk about steel, which is shining. What's causing this shine in the steel's valuations at par with the average, but why is Indian steel well placed? A detailed explanation coming your way on that. Also, another theme that will be discussed today with the budget around the corner, the oldest rumor in town is back, changes to capital gains tax. Ignore the noise, so don't forget to tune in to CNBC TV 18 at 4:30 p.m. today for our weekly special Editors Roundtable. Well, the intraday chart of the Nifty comes up for you, and that tells you the story of the day. At lower levels, we are seeing a fair amount of support. Then there was that move on the way up, and last half an hour, the market's done virtually nothing. So it's flat, an up move, and then flat at the upper end of the range. In fact, we've come off a tad from the highs of today's trading session. Nestle India, that's the one that should come up for you. Off highs, we've seen some sell-off in the FMCG pack. ITC has a heavier weight out there, so that's the other stock which is currently trading lower. HUL2 is mildly off highs. The market's still meandering around the upper end of the range. But let's talk macros then. The lower than expected inflation in December has slightly increased chances of RBI not hiking rates in the upcoming February policy. But the majority still expects a hike. This is as per CNBC TV 18 poll of economists and bankers. Lata has more on that. Lata, are they going to dance to the Indian inflation tune, or what happens in the US?
Well, primarily the results of the poll itself. 20% of the respondents only said that in February there may be a pause. And of these 20%, they said that they were already sitting with a pause. At least half of them said they were sitting with a pause. This has only strengthened. The December numbers have strengthened their feeling that the Reserve Bank will not hike. But the important point is 80% of the people polled are expecting a 25 basis hike. The 80% of the people whom we polled also expect, this is a separate 80%, of the people polled also expect the February hike to be the last hike in this cycle. They think that 6.5 will be the top, will be the terminal rate. But there is a 20% which believes that there is still a possibility of yet another hike and the peak coming to 675. The Reserve Bank will be data dependent. About 30% expect the stance to get tweaked. In February, there will be a hike, but the RBI may tweak the stance to either indicate neutral stance or to say in some fashion that April onwards we will not hike or we will be data dependent. But some such a dovish tilt is expected by quite a few people. Now, what led to it? The December number coming below expectations was one reason. The other reason is the US data also coming in line or in slight areas even below expectation. The feeling is that there is no pressure on the rupee now. With a combination of dollar becoming weaker, dollar index becoming weaker, crude, rather remaining towards the $80 mark. Remember, all of the RBI forecasts are predicated on $100 per barrel cost of crude. So for a whole host of reasons, the expectation is that a softer RBI or a monetary policy committee in the February 8th policy cannot be ruled out.
Okay, all right. Thanks a lot for that, Lata. Well, let's get in Mitesh Thakkar yet again. Mitesh, we're seeing a good bounce actually today from the day's low. We're up close to under 180 points odd. What are the levels you're looking at on the index itself? And you must be having a couple of calls as well. Run us through them.
Imagine on the upside, as I said, I think breakout or reversal at least on the short-term charts would be signal once we start getting past 18,000. Today, I think the high is just a point below that. I think 18,000 remains the pivot to be crossed.
Okay, all right. No, that's not working out, Deepan. Mitesh, we'll just come back to you. But in the meanwhile, I think Deepan Mehta is joining in. So let's focus on the banking names. Abhishek Kothari is joining in. Tomorrow, the big number that we're going to be getting is HDFC Bank. So Abhishek is going to be a busy man. Abhishek, tell us, what do we expect from HDFC Bank tomorrow?
Well, strong top-line growth on the banking sector, we call it as NII or the net interest income. That could see the growth rate being the highest in last 14 quarters. We already have the business update in terms of deposits and loan growth. So deposits were up nearly 20% YOY and about 3.5% sequentially. The CASA ratio, that's disappointed. It's come in at 8-quarter low of 44%. Loan growth YOY about 19.5% is the weakest in last 4 quarters. And sequential loan growth of 1.8% is the weakest in last 6 quarters. X of pool or the loan that they share with SDFC Limited, the loan growth is 19.5% YOY and about close to 1.9% on a sequential basis. Credit deposit ratio, that's also slipped a bit. It's at 5-quarter low of 86.9%. However, the banking sector has been seeing a rise in the interest rates, especially on the lending side. So the net interest margin could improve YOY and quarter-on-quarter. Analysts are pegging a minimum 10 basis point improvement in net interest margin on a sequential basis. Slippages of formation of bad loans as per Phillip Capital is expected at 6,000 crore. Last quarter, it was at 5,700 crore. Kotak Securities is estimating operating profit growth of 13.5% YOY and about 9.5% sequentially. You need to watch out for the OPEX or the operating expenses because the bank has been on a branch expansion spree. Asset quality largely to remain stable or improve sequentially. ICICI Securities is pegging gross NPA ratio and net NPA ratio to decline anywhere between 2 basis point to 4 basis point. So in terms of our poll, we are working with a poll in terms of NII growth of around 20.9% YOY and 6.1% sequentially. We are working with a profit growth of more than 17% YOY and a little more than 14% sequentially. Back to you.
Right. Thanks very much, Abhishek, for that. Just a few stocks I want to put out because, the market breadth is positive. But the kind of stocks which are up, well, let's just a few names. So Lloyd Steel, actually there are these steel, iron and steel names. Lloyd Steel, for example, should come up. It's up on very large volumes. There is Vardhaman Special Steel, another one which is jumping higher. Then there is Sunflag Iron and Steel. These are the kind of names. Nothing against any of these names, but and what is, on the other side, what is going down is a lot of liquid, large market cap names which are down 3, 4, 5%. So that's a Sunflag one for you, Vardhaman Special Steels, and there is Lloyd Steel as well. Then you look at, apart from steel, ITI, which is higher, J&K Bank, which is top of the list in terms of broader markets, Edelweiss is up, ISMT, the pipe company, Ponni Sugar is higher, Hyderabad Industries, HIL, and Sanghi Industries as well. So, not really top of the line in terms of, market cap or general liquidity, etc. Lesser traded, under the radar kind of names, but they're all occupying some of the top positions in the broader markets in terms of what's doing well. Deepan Mehta is with us, Director at Elixir Equities. Deepan, good to have you with us here. Thank you very much. How are markets looking? First up to you.
Yeah, good afternoon, Prashant, and thank you for having me on your show. I think markets are looking good at this point of time, and that's more to do with the earnings which have come through so far. I know usually the better earnings come through in the beginning of the earnings season, and the bad news comes towards the end. But whatever we have seen so far, and whatever the pre-quarterly releases have come, and what the analyst estimates have come for the December quarter, are all looking very positive. And I expect that this to be a good earnings season with many new ideas which may come through. And that may certainly drive the sentiment higher, and maybe investors waiting in the sidelines should start to get their money into the market and start to invest. So on the whole, the market's looking great, and we are keeping a close eye on what the numbers are coming through and hoping to find some new ideas or some exceptional performers based on what they have reported for the December quarter.
All right, Deepan. We're looking at DMart as well. Apart from HDFC Bank, the numbers that come out tomorrow will be that from DMart. And while we know their revenues, the company's reported their highest ever quarterly revenue in the third quarter. Standalone revenue grew by about 25%, 11,300 odd. That's the standalone revenue. So you had about 150 to 200 crores of DMart Ready or their e-commerce business to that. And that gives you a consolidated revenue of close to around 11,500 crores. So that's a rough estimate out there. They've added 4 stores in the quarter, 22 new stores added this year. The poll on the street is basically with regards to the EBITDA. 18.5% jump is what the company is looking at for their EBITDA this time around, 1,027 odd crores. And the net profit likely to grow by about 20%. We're expecting about 665 crores on the bottom line. So the numbers that we have to look at for DMart this time around, 11,500 crore on the top line, 1,030 odd crores on the EBITDA, and 665 crores in the bottom line. The stock is currently at the low point of trade, has corrected about 16% from the highs. Take a short break, come back. We talk about DMart and we talk about DMart to Deepan as well. Take a short break, come, and as we do that, here's an important information for you, our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list. Welcome back. Just before we close, Deepan, your thoughts on DMart? That reports its numbers tomorrow as well?
See, I think the problem with DMart is not the numbers, but the sentiment is poor in the stock because of anticipation and presence of extensive competition. I think Reliance also is there in the space, and as is Tata, and there's a whole lot of disruption taking place in the very space that they are operating in. And unlike in the past, now we have a lot of choice when it comes to retail. And some of the apparel retail companies are doing very well. And then we have a whole host of new listings in the specialty retail like Metro Brands, Go Fashions, Manyavar. I think all of these are also showing exceptional performance and reasonable valuations. So some amount of money moving out from the traditional retailers into these new generation retail companies, and expectation of a higher competition and certainly slower growth going forward. At the same time, it's not cheap as well. So.
Got that. All right, Deepan, really sorry, but today we were running a little short on time. Wishing you a good weekend ahead. Well, we'll quickly wrap up on market action today. It was a good day, actually. We go home with gains of close to around 100 points odd. A few stocks that did well. IndusInd Bank was up and about. You had Tata Steel that was flying away. Adani Enterprises as well. Those were stocks that were winning in trade today. On the flip side, you had a few losers. Titan was under some pressure. SBI as well was down close to around 0.5%. But the big headline today really was that the Nifty bank made a comeback, and it made a comeback in style. Was up 0.6% odd. From the broader markets as well, you have quite a few stocks that are moving around. L&T Tech, well, the market didn't like the fact that they did an intergroup transaction out there. Didn't like the valuations and the utilization of cash. The stock ended with a cut around 5%. There was a downgrade coming in on Gujarat Gas, so that ended with a cut of around 3.5% odd. And on the flip side, you had a select banks and financial names that did well. To name a few, Chola Investments, Federal Bank, IDFC, and Power Play. You had PFC as well that did pretty well. Guys, anything else?
No, I mean, you're off to your Friday evening fun. Nigel, I think we're done for the day. So good session, good bounce, good close. Let's hope we don't get a nasty surprise out of the US later today. And we come back next week, of course, with really into full steam earnings. That's basically going to be the focus. Let's just wrap up here. It's a wrap on this edition of Closing Bell. From all of us, thank you very much for staying with us. Our Friday special, Smart Money, comes up next. Stay with us.